Good morning, everybody. So I wanted to do another video on a little more on the Ichimoku and using multiple time frame analysis for your entries. That's what I'm going to be going over on Thursday's webinar. So if you're interested in the webinar, just go to my site, easyemunitrade.com, and hit the webinar tab. You can use multiple time frames to analyze the entry that you're going to take on an intraday basis. So you can use it for day trading. You can use it if you're somebody who swing trades. You can look at a daily, a weekly, a monthly. Whereas on as far as day trading, if you're trading off a smaller chart, like I like a 4-tick range chart, but if you're using a tick chart, a range chart, a small time-based chart, you can use a 5-minute, a 15-minute, 60-minute as additional time frames to analyze and verify your trade. So let me show you what I mean by that. So really what you're looking at, the higher time frames or tick frames, whatever you're using, to see is where support and resistance are based on the higher time frames in comparison to the entry chart that you're looking to take an entry off of. So this is the Russell on a 4-tick range chart from yesterday afternoon. So you can see this line here I've got at 141 in the afternoon. You can see this area of support that I drew here. And so this would be a great spot to take a Chico line breakdown when this is where the Chico line is, because that's plotting 26 periods behind you. So at the time when this bar here at 141 breaks the support area, the Chico line is breaking this area of support as well. So normally you would think, okay, well, I'm going to go ahead and take that as a Chico line breakdown. And even if you were interested and you put a sell under this bar, it would never trigger it anyway. But this is a great example. So you've got support. You're thinking, okay, I'm going to take an entry under this bar. So now you drill up to some higher time frames. So on the Russell, this is a 2-minute chart. On the upper left, a 5-minute below, to the right, a 15, a 30, and a 60. And you don't need to use all of these. I'm just showing you for the sake of this example and explanation how you can use these. So right here where I've got this arrow drawn, this is at 140. You can see that this price bar on the 2-minute chart is coming down to the cloud. Okay, so that's where that is, right at support as you're getting ready to take this trade here at 141. So if you were looking at this entry chart to take this entry, you quickly, look at the higher time frames and you say, okay, well, I'm right at support. I might want to wait to see if it breaks through the cloud, because obviously once it gets through the top part of the cloud, it could retrace down to the lower part of the cloud as well. So you've got support here on this 2-minute chart. Now you look over here at the 5-minute chart and you really don't have any support below until it finds its way down to this Kijun line. So you're okay there. The 15-minute chart, you've basically got room down to the Kijun line here. It's a little earlier. Excuse me. And the Kijun line is right here on the white line. Sorry, my throat has been giving me issue here with allergies. I'm just going to get rid of that line so you can see. So it's got room down to this white line here, and that's the Kijun line. So it's got room to support there. Here on the 30-minute, it's got plenty of room below. 60-minute, plenty of room below. But here on the 2, like we said, none. So anyway, your entry would not have triggered. So let's look at the next entry on the Russell. So you're still interested in possibly doing this as a Chico line breakdown, because what looks interesting about this is we know we've got this floor trader pivot midpoint below us. So if we can get a decent setup, it's likely going to retrace down to that area. So what I typically do is here where it broke my support line, I'll move my support line under the low of that bar and then look for a break of the area of support, which happened right here. This bar here gave you the close below the support line with the Chico line breaking, so that's at 150. Let's see what time that bar finished. The bar finished at 152. Okay, so great. So now we can look to the higher time frame. Okay, now it's a little later. Let's see what we've got on the higher time frames at 150. So here's the Russell. Now you can see at 150 we're in the cloud and we're under the Tikin and the Kijun line. So realistically we do have the possibility of finding our way down to the lower part of the cloud. Keep in mind the cloud is plotting in the future, so just because you have this much space below you on the cloud doesn't mean that that's where it's going to get to. Keep in mind it can go sideways while in the cloud and then pop out the other side or hit the other side, because it's always, it's not static, it's constantly moving. So you've got room there to try it. Here at 150 on the 5-minute chart, you've got room down to this pink line, which is the Kijun line. Look at the 15-minute. We just talked about it. You've got room down to the white line, the Tikin line. 30-minute, you got room down below. 60-minute, you've got room down below. So you've got room to give the trade a shot down to the area of support of this floor trader pivot midpoint. So that's how you can use multiple time frame analysis to better choose your trades and filter out some of the ones that may not get to your target areas. So I hope you find that helpful, and if you want more info on that, come to Thursday's webinar. I look forward to seeing you guys. Have a great day.